This is the luxury world. Get inspired with us today and tomorrow. In this video brought to you by the luxury world, we will talk about the factors that will make you think about why you should buy a Rolex watch now before it becomes too late. If you have not subscribed to our channel, we encourage you to do so to stay informed about our upcoming videos. Over the past year and a half, we have witnessed the repercussions of the most significant surge in the luxury watch market's history. Think back to that time when watch prices were skyrocketing by hundreds every day and week. It was truly remarkable to witness this sudden surge in demand for luxury watches. As a result, prices soared to unprecedented heights. For a while, the supply in the market could not keep up with the overwhelming demand from potential buyers. This led to a situation where the number of buyers exceeded the available watches, causing prices to continuously escalate. However, eventually, there came a tipping point when the market became saturated with watches as everyone rushed to sell, leading to a shift in dynamics. It is intriguing to note that despite the overall decline in prices over the past 18 months to 2 years, there are certain exceptions, such as GMT Pepsi. This watch, adorned with a Jubilee bracelet, seems to have maintained its value, almost existing in its separate price realm within the market. This can be attributed to reduced production levels and rumored discontinuation by Rolex, leading to heightened excitement and interest surrounding the watch. Consequently, more individuals have sought to acquire this specific model, resulting in a scenario where supply is limited while demand remains high. Thus, in line with the principles of supply and demand, the scarcity of this watch in the secondary market has driven its price upwards. If the supply and demand were in balance, the market would reach a state of equilibrium. However, sustaining such equilibrium over an extended period is challenging. Typically, prices tend to trend either upward or downward. After a period of escalating prices during the bull run, there was a shift in momentum, leading to a downward trend in prices. It is important to clarify that when referring to supply, it pertains to the secondary market rather than the primary market supplied by Rolex to authorized dealers. Now, what characterizes a bear market or a declining market? The transition from a thriving market where everyone was eager to buy watches to a sudden crash involved several factors. People gradually became hesitant to pay the inflated prices, leading to a decline in demand. Consequently, dealers, driven by the need to sustain their business, had to adjust prices downward to stay competitive in the shrinking market. This downward pressure on prices continued as dealers sought to attract buyers, even if it meant offering deals that might not seem advantageous in the long term. In such a declining market, the reduction in the number of buyers exerts downward pressure on prices. However, the luxury watch market tends to be stable, so volatility might not be extreme. Thus, once equilibrium is reached, the expectation is for prices to start ascending once again. After 2 to 3 decades of consistent, gradual growth in the luxury watch market, what triggered this sudden and extraordinary surge? The context of 2020, a year marked by lockdowns and increased consumer spending despite limited opportunities for expenditure, adds complexity. While it is understandable that consumer spending might rise during lockdowns, particularly on items like new TVs or home entertainment equipment, the surge in luxury watch purchases seems puzzling. A watch primarily serves the function of telling time, with additional features being minor. So why did people feel compelled to invest in such material items? One explanation is that the lockdowns provided individuals with more time at home, allowing them to explore new interests. Then there is this intangible factor where investors begin to take notice and get a sense that the increased interest in the watch market could present an opportunity for profit. During the early days of the lockdown period, we saw investors entering the watch market. However, as is common in any bull run across industries or asset classes, the masses soon followed suit. When the majority joins in, it is typically a signal to exit, sell off assets, and move on. This leads to the question, why did the market crash? What triggered the bear market, and why could prices not continue to rise indefinitely? There was a point when it seemed too good to be true, with prices destined to climb week after week without risk. At this juncture, people started to question the market's stability and its long-term viability. Talk of a price bubble emerged, instilling a sense of unease among investors. When everyone begins discussing such concerns, the dynamics inevitably shift. It comes down to individuals delaying watch purchases to see how the market will unfold. Uncertainty creeps in, and instead of impulsively buying watches as before, people adopt a wait-and-see approach, anticipating potential price drops. Consider this scenario. When everyone collectively decides to delay or cease buying watches, it sets the stage for a market crash. Picture this. You might have found yourself in such a situation, like with a rose gold olive day date. Let us say you purchased it for £354,000 just a month or two ago, only to find its value plummeting to £70,000 in a short span. Naturally, the inclination for many would be to sell, capitalizing on a £30,000 profit. And indeed, many individuals did just that, and it is entirely understandable. However, there is another side to this coin. Some investors opted to hold onto their watches, anticipating further price increases. Yet, what unfolds is a downward spiral in prices, dropping to £65,000, then £50,000, and eventually plummeting below £40,000. If you held on, what occurred is that you found yourself ensnared in a situation where you observed prices declining, hoping for a rebound that never materialized. This was due to an oversupply of watches like your rose gold olive day dates flooding the market, coupled with insufficient demand from potential buyers. Beyond individual purchasing behavior, the underlying causes of a bear market often stem from macroeconomic factors, many of which are unpredictable or beyond our control. These factors include political unrest, warfare, and other macroeconomic events that may seem unrelated to the luxury watch market. However, everything in the economic ecosystem is interconnected. Similarly, events like warfare can disrupt consumer confidence and spending patterns, further impacting the luxury watch market and its dynamics. The uncertainty surrounding numerous factors adds a layer of doubt to the situation. With regards to war, not only does it pose health and safety risks, but it could also disrupt trading agreements and impact currency rates, all of which can trickle down to affect consumers. When many people decide to sell their watches simultaneously due to fears of economic loss, it floods the market with supply, driving prices down further. This mass selling is rational, as nobody wants to incur losses on their investments, particularly when they have made substantial financial commitments. In such a scenario, watch businesses, including dealerships, must still operate, necessitating competitive pricing in a declining market. Consequently, this downward pressure on prices exacerbates the situation, leading to further price reductions. It is challenging to assign blame in this complex scenario. While dealers aim to serve customers and make profits, individuals have the right to decide what to do with their assets. Rolex and authorized dealers in the primary market may have limited influence on the secondary market. It is a multifaceted issue that defies easy attribution of blame. Looking ahead this 2024, one can hope for a return to steady, gradual price increases in line to the pattern observed over the past 30 years before the bull market. Buyers need to prioritize personal enjoyment over investment expectations when purchasing watches, as relying too heavily on investment potential may lead to disappointment. What are your impressions on the topic we shared in this video? If you enjoyed the video, we would appreciate it if you let us know by leaving a comment and giving it a thumbs up. Do not forget to follow our channel for more content. Thank you for watching The Luxury World, and we look forward to having you join us in our upcoming videos.